Right, video number 2 in the Sort Your Life Out series. I'm going to explain about trading and candle charts and how to get your head around it and begin, basically. Right, so if you go to tradingview.com, when you go there, I'm pretty sure it'll show you the home page. So you'll go to that, then you'll click whatever, sign up. You can get the free one. The free one only lets you have a certain amount of things on only 3 indicators on the chart at a time. If you get the pro trial, you can add a lot more onto the chart, but you don't really need it. But if you're cute, you could go to a website like gmx.com. Just create a bullshit random email address. So just sign up. You don't need anything to sign up to make a GMX. You can make a GMX account really quick. And then once your trial runs out, you can just put in another one. Put in a new email address, get the trial. So you can just constantly keep doing the trial, but you're getting the pro version. Well, you could also buy it, whatever floats your boat. Right, so you want to go to chart, and it will open up candle charts. So a candle chart is a representation of the price, where the price is at a certain time. When you first start it, you'll have a white background, but you can click this cog here. And you can change all the background. You can take that grid off. If you just make the grid lines black, it will hide it. I prefer black. It's easier on your eyes when you're staring at the screen for fucking whatever amount of hours. Right, so this is a candle chart. Just going to explain it from the start. This is a 1 day period, right? So each candle is 1 day. If you go to 1 hour, each candle is 1 hour. If you go to 1 minute, each candle is 1 minute, right? So it just breaks up the periods. So a candle, right? So the fat part, that fat green part is the candle. And then the little skinny line coming off it is the wick. Just like a candle and a wick. It's a wick and a candle, right? So it shows you the price of that given period. So what it does is, if it's green, you know that the price started low and rose up and finished high in that 1 day. And if it's red, you know that it started high and it finished low. So the reason why you have a wick, because the wick shows you the absolute price it went to in that day and the absolute bottom it went to. So for this one, for example, for this red one, right, we know it's red, or we know we know it started at the top here. It's the top of the candle because it's red, and it finished at the bottom of the candle because it goes down, right? But we know that at some point it went up to this and it went down to this. So it most likely started here, went up, the price, people kept buying, and then it hit a wall. See down here, there's a big wall. That's just loads of buyers, and there's sell walls and buy walls. So it's not complicated. I'm sorry if I'm overcomplicating it. All you do is, you just have to know that the top of if it's red, the candle shows you where it started and where it ended, the price, and the wick shows you the absolute high and the absolute low. So on this candle, it started at 15,819.4, went all the way up to 16,566.5. It went all the way down to 14,6765, blah blah blah, and then it finished at 15,459. So it's just the same for all the candles. If it's green, we know it started low and ended high. So it started low. At some point it went down this low. Then at some point it went all the way up to here, and then it finished there. That's all a candle is. A candle is just showing you where the price went in that time frame. So, what do you do here? You need to, I'm going to show you the strategy I'm using at the moment, which is pretty simple, right? But you need to get familiar with everything. You need to learn everything. So you need to learn what types of candles they are. You need to learn different patterns that show up on the charts. You need to learn indicators. So right, typical indicator is moving average. So if you click here, you can add an indicator. So if you just type MA, moving average, right? I'm going to add a few of them because I'll be using them later. Right, so the moving average, this is a 9 moving average, right, on the close. That means where the line is at this point, at any point, it's the average of the last 9 candles. So at this point, it's the average closing price. So that closed at 15183, and that closed at 14878. That closed at 13508, right? So at this point, this is at the moving average, because it moves every time, because obviously the price changes, so the average moves every time. So this is the average of the last 9 closes, the price of the last 9 candles when they finished. You can change that to like low. So low means the average lows. So it's the average of all the low points, the last 9 low points. And then you can change it to high as well, which is like the average of the last 9 high points, right? And you can change last 10, the last 11 candles, the last 12, blah 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 blah. So people tend to use all sorts, right? So a lot of people use the 200 moving average to let you know whether the market is going up or down. So if the candles are above the 200, it means the market is generally going up. And if the market is below the 200, it means the market's generally going down. I don't think it's that reliable. I don't use it at all. Just to be aware of it, let you know. You just need to learn everything, as I said. So 34 moving average is a pretty common one. So people use the 34 a lot to make their buys. So like if the candles go above the 34, people usually buy. And if it goes below, they'll sell. So say that went under the 34 and then it broke over it again. Someone put in their buy, right? And they didn't sell again until it hit the 34 again. That's 100% profit. That was 39 days. But if it was down in the hours, it'd be less time and less profit, right? So there's all sorts of indicators. There's like, you can add all crazy ones, but you need to try and learn them all. Just to I don't use them, but just so you know what they are. So like Bollinger Bands is an indicator that shows where the market's going. People buy usually when it breaks out on the lower band, and sometimes they take profit when it hits the middle band, or else they wait till it goes up to the top band. I don't really use it because it can't really predict the future. Nothing can really, but you can get more reliable things. So people use loads of different indicators. They have fucking 10 different indicators on their screen, which gets really complicated because they're trying to like confirm it, confluence, like, you know, to try and make it, oh yeah, if this indicator's doing that and this indicator's doing that, I'm gonna buy. So yeah, I don't know, I haven't used every indicator. There's so much to go through, but I've just been looking at keeping it simple. Like basically people just naked trade. There's what's called naked trading, and people don't use anything. They just use what way the candles are going. So like, I think this is called 3 black crows when there's 3 going down. Depends on whether the market's in an uptrend and a downtrend. You have to learn all this shit. I'm gonna put simple videos for things that I think are relevant, so don't freak out, don't worry. I'm gonna make everything as simple as possible, right? So you do need to like look at different candles, right? So you need to, I'll add I'll add stuff to the Facebook page, stuff like this. So you need to know about these different shapes, because if you know about these different shapes, you can kind of tell it helps you tell where the market's going. Like if you have a volume indicator on it, yeah, so it tells you volume, the amount of transactions. So that you can see that it was flying down, so there was loads of sell orders there, and you can see the volume. But there's different things, like there's different shapes, like these 3 here. You can tell that the market was going to go down because of the wicks. The market tried to go up, but it came down. Tried to go up and it came down. Tried to go up and it came down, and then it crashed down. So basically, it's called price action. It's naked trading. Yeah, there's a lot to it, but I'll try and just simplify everything as much as I can. Right. So basically, what I'm doing, I'll show you maybe I'll show you a few indicators. So there's Ichimoku Cloud. I'll make a list of indicators that you should know. Even though you're not going to use them, it's good to know them, and you can look back over them sometimes. Maybe you will use them. Maybe you won't use my method. I'm only learning. My method is constantly evolving as well. So this can like show you areas of resistance, like where there's because people get caught. It looks complicated. Yeah, leave that out. People get caught. Like people say they buy at the wrong time and then they can't sell. They're stuck. So that means that they're a resistance point. So it means once you get back up to that price, they'll try and sell then. So that could drive the market down. The more sells there are, the lower the market's going to go. The more buys there are, the higher the markets go. Like there's a volume profile indicator, which is pretty interesting. It's a little complicated. You don't need to use it. I'm just going to show you. So this shows you like where all the most amount of buys are. You know that this is the point of control, I think it's called. So that's the most at this price. There's been loads of buys. So that's kind of like a wall. If it hits up into it, it might not break through it, depending on what way the market is. And if it was above it and it hit down to it, it might not be able to penetrate it. So right, this is all irrelevant really. I'm just trying to explain some stuff. I'm just going to keep it as naked as I can, right? So what I did was, with the moving averages, as I said, the 34, what am I doing? Yeah, 1 hour. The 34 is one that a lot of people use. So they tend to buy when it breaks up over the 34 moving average, because when the price goes above 30 average, the last 34, it tends to be going in an uptrend. That's why. And then when it breaks down up under it, it tends to be going in a downtrend. So people use it, but it's not all that accurate. There's definitely, like, when you're back trading it, when you're looking over it, you're like, Jesus Christ, everywhere I look is just win, 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 win. But it's different when it's real time, when all you have is here, when all you have is the front to look at. it's hard to know where to go. This is why volume and that helps, right? So what I did was I started messing around, just moving the average and lining it up with good entry points. So basically, I'll take that out. What I did was I ended up just, I think I got it to, I got the settings to 8 on the close, right? I'll just change that to green because that's your entry point. So where did that 8 go? Did I not change that to 8? Right, I'll just try that again, sorry. So that's your 8 averages, right? So if you look at that, tends to be, once it crosses the 8, it's a really good point. It's an early point to be getting in at. That's a good point to be buying at. Generally, once it crosses above the 8, it tends to be a good price to be getting in at early. You know, it's better than the 34 because sometimes the 34 will be up here, and if you were to buy in here, you wouldn't be getting much. So got the 8, and then I was just looking for exits. I was looking for I didn't change that to green. So yeah, right, so green is go, green is buy, green is buy. Right, so then looking for an exit point, I just got the, right, so go with this, and I put it at the low. Just you can mess around, you can change it yourself once you get used to it, but if you want to just stick to what I'm doing. So yeah, there, so I kind of looked at that as an exit point. So when it goes up through the green, you buy, and then when it breaks and closes through a red, you sell. So you're getting 6%. Like a 6% is fucking amazing. If you're getting 5% in a day, if you're getting 5% in a day, you can be just doing little 1%, 0.8% trades, and if you get up to 5% in a day, right? If you look up compounding, if you had $1,000 in, right, at 5%, that's over 6 months. But right after, if you just, so 5% of 1,000 is 50, you just add that on, just keep adding your profits on and trading with it, and aiming at just a 5% trade every day. Like finish a day with 5%, which is very doable, very, very doable. After 48 days, so after nearly 2 months, you're up to 10 grand. So you've 10 times your money. Like you've multiplied your money by 10. That's crazy, you know. It's 1,000% profit. You can't. Where do you get that? So then I would probably recommend, all going well, you get to that, I would recommend just start taking profits there or whatever, you know. Or you could take profits way sooner. You could make 2 grand, get it up to 2 grand. How long would it take you to get it to 2 grand? It would take 15 days to get it to 2 grand, right? And then just take out your 1,000 that you put in, and then it'll take another 15 days to double up again. But once you get to 10 grand, you're laughing. Like you're making 500 a day, and you can. It's up to you. But anyway, we'll start baby steps, right? So you wanna learn these. You wanna learn the shapes of the candles, like shooting stars and dojis. You also want to learn different. These are not. Hold on a second. You want to learn patterns. So there's different patterns like a bull flag. But I'll put up simple videos that you can just watch. That will explain it pretty easy. These are different trends that the market go in, but because of the nature of humans, the way they buy things, the price tends to move in different trends. Like there's a big thing called Elliott waves, and things move in waves to do with the Fibonacci series and stuff like that. So these things are good to know. Like you're better off, even though you won't be using them that much. It's nice to look at the chart. It's good to look at the chart and recognize them. Give you a bit of confirmation that if you're making a good trade or not. So like if you're familiar with Malcolm Gladwell and his books or his podcast or whatever, you'll know the 10,000 hour rule. So like if you do something for 10,000 hours, you become a master. Theoretically, you become a master in it. So yeah, if you do like a half an hour a day for 5 days a week, it takes 7.5 years to become a master. You know, if you just keep doing that's not much. You know, set for 7 years. In 7 years, you could be financially free. But with crypto, this will be way faster. I think 2018 is going to be insane. The way we're going, the reason why we want to trade is to put money into these small ICOs to invest in these small coins that are going to explode and make a lot of money. So I'll fill up the Facebook page. Don't worry. This is overload. So this page, I'll put a link. Bulkowski's Pattern Index, the patternSite.com. He's seen as like one of the best traders in the modern age, whatever, contemporary. And yeah, he had like this is a really in-depth website. It has all the candles, all the different patterns. It has everything you need to know. But sometimes this is probably more advanced. You know, look at a few YouTube videos that I'll put up. You get the grasp of them, and then as you progress, you can start getting real in-depth, and just the more you learn, the more prepared you are, the more money you're going to make, obviously. So, right, so what I do, I had this for, this was the pattern I was using, but it's not, this is the strategy I was using, but it's not foolproof, because if you see, it looks like green here, red there, it looks like everywhere you go, there's just win, and there is a lot of wins, but there's just, when it's real time and that's all you see, it's hard to know if it's just going to turn on you like that, you know. So you're not making, you could make something there, but if you got out there, you make 2%. Even 2% is brilliant, you know. But that's why it's good to trade in like the higher time frames, because you're not going to get stung really fast with because that took an hour to drop. So you can see that it's dropping, and you can cut your losses. But you want eventually to be getting down to the minute, because all these reds, so this, you want to be going up and cutting out the reds. So you want to be, when it's green, you buy, and then when it goes up you sell, and then when it drops you buy back in. You buy the dips and you sell the top. So you're cutting out the reds. It's basically, instead of going up and down, it's just going constantly up, if you know what I mean. So I'll fill out a tab that has all lingo. So basically, when the market is going up, they call it a bull market, and when the market is going down, they call it a bear market. So bull, grab the bull by the horns and go up, and bear, I can't bear to see it going down. So that's a bull candle, that's a bear candle, because it's going up and it's going down. Right. So what I did was I got the, I'll just take this volume out there because it's a bit distracting. I got the indicator is called MACD, right? So that's the moving average convergence divergence. Sorry, what are we doing here? Indicators. MACD. I'll put up a video on how it works. Loads of people don't really know how it works properly. They don't explain it, but I found a video by these YouTubers that explain it well, so I'll put that up. But you don't even really need to know. All you need to know is it's working on the moving averages and divergence and convergence. So divergence means like when the price is going this way, but the volume starts changing, which means like if it's moving up loads, right, the price is going up because people keep buying, but the amount of people buying goes down. That's the volume's going down because there's less people buying, because it's getting oversold. It's too much, like that's too much of a run there. So at this point it's oversold, the volume is dropping, which means it's diverging. So you know that it's going to get to a point where the market starts turning again and the sales start coming in. So basically this helps you. You can see here when that went down. Once this started going up, once this crossed this, when the blue line is going up towards the orange line, you know it's starting to go back up the market. And then you see once it hits the green and it's confirming that it's going up, you buy, right? Another indicator I added is the stochastic RSI. So it's the relative strength index is the RSI, right? So it's just waves, but it shows you whether it's oversold, right? So if it's above, this is like this green, or sorry, this purple. If it's above the purple, it means it's oversold. It's sold too much, so it's going to start turning down. And if it's below the purple, it means it's no, that was overbought. Sorry, excuse me, overbought. So it's bought too much. So you see, when it's getting, once it hits this point, it's loads of buys. So it means the market's going to start dropping. There's more sellers than there is buyers. Right, so same the other way around. When it's going down, loads of sellers, and then it hits a point and starts turning. Once it gets below the purple, you see. So you can match that up. So that's basically the strategy I do. So you can even use the red for an entry point, but sometimes it doesn't. See here. Sometimes it doesn't, or it did there, but sometimes it doesn't actually work out. I think the green is more, it's safer. Once it crosses the green, it's usually going in the right direction. So, but you have like you have your confirmations here. It was oversold, so the market's starting to start going up, and the MACD is starting to go up as well. So if you were looking at it like this in real time, you see on this candle it's after overselling, so it's starting to go back up, and you see that the blue is going in a bullish direction. It means it's starting to go up, so you know you can buy in there, and then boom boom boom, there you go. You could have that's 28% profit in 2 days, which is insane. You only get that in crypto, really. So, and you could have just kept going on. That could have been your exit point, but I don't usually exit until the candle closes on the red. So you could have just rode that the whole way. So that's the first time that the red candle closed. So if you had just bought in here and stopped there, that's 100%, but that's 50 days. So yeah, you have to figure out your own strategy, right? So what I do is, yeah, so that's basically it. I use the 8 and the 8 moving average. So this should be low. Oh, it is low. Why does it say close there? Right, I use the 8 moving average for an entry point, and I use the 9 for an exit, depending on how I'm feeling. Sometimes I'll just close it here if I feel like it's going to change. Even that is tidy profit, like. So, but you'll see that it's confirming. You know, you want to match these up. If you don't understand, drop me a message and I'll go through it with you individually. Right, so that's that. Now the thing about it is, you want to find currency pairs that have high volume, which means there's lots of buyers and lots of sellers, because that makes the market move. Because you don't want to be doing this in a market that's not moving, that's going sideways. It wants to be trending, ideally on an upwards trend, a bullish trend, right? Because that's called an uptrend because it's going up. That's a little downtrend, and that's called a range, kind of like a mountain range. It's going sideways. This isn't great for doing that. The profits aren't as good, you know, compared to that. But what I do for a visual aid is I put trend lines, right? So where all these dropped were, I put a trend line along the tops of them. So I know that because it comes in waves, it seems to work out like this, right? So this is not, this is just something that I started doing. If you see it's dropping like that, right? So if you see a green candle break that line that you're after putting there, and then you're seeing that it's oversold and it's not really going up here, but depends on how you feel. You have to work it out. You have to keep watching the markets. You have to go through loads of different coins, and see which are the best ones to use it on. Because some of them this works really well, and some of them it works pretty shit. So then when it breaks that line and it's looking good on these indicators, and then it breaks the green line, then you definitely want to buy in. You could use the green line as an exit as well. So there, that's 25% in 14 days. That's pretty great as well. But it's different when you go down in the time frames, depending on the coin as well. So if you're using a coin, so you can go on to if you go on to Binance, right, and hit 24-hour volume, it shows you the coins that have the highest volume. So these are coins you want to be looking at and testing this strategy on, because they have loads of movement, right? There's also volatility. So it's the 24-hour change. So that's like that moved up and down 42% in the last 24 hours. So you want to be looking at them coins as well, because that means that moved up 42% in 24 hours. So if you were doing this and catching this, if you were watching it, you could have caught it at a time. And yeah, there's massive potential with this. So those lines, these lines work everywhere, and they work the other way around. So with the green ones, you put it at the bottoms, you put it below. And then if a red candle breaks through that line and it breaks the green, it's going down. And you can do that all the way along, even on just two candles, two reds. You can see, do it like that, do it like that. It's just a visual aid. You want to match it up, because these didn't match up here. This didn't match up. This is going down, so you don't really want to be buying there. Here, like if you stick to that criteria, I'll probably write it out and leave it on the trading page. So when it crosses the green, crosses your line, set up your lines. So if this was in real time, if this was like this, you'd set your line like that, right? So when it moves to the next line, you see that it's breaking that. You see that that's oversold, so it's going to be moving up. You see that that's divergent, so it's going to be moving up. So, and it's hitting the green line, so you definitely want to buy in there. And then boom, look, with these, using this, the green line, these indicators, and this line, nearly every trade, like probably about 95% of the trades are successful. But even you don't have to be in the trades for long. You could be just on the hourly. You could be on the hourly. You could do it in the minutes as well, but you need to find the right coins. They need to have high volume, because if they're not, they're messy. The candles go all over the place, and it's really hard to figure it out. So if you were here, see, you just put the line across all the tops of the reds, and then if it breaks through the line, it hits the green, and it's on its way up from oversold, and the blue crosses this, that's definitely a buy order. You definitely buy in there. And then you choose when you want. That's 5 hours. That's 11% in 6 hours. That's crazy. You'll be if you're compounding that, your money will be going up crazy. And that's just one trade. You could do that all day long in the minutes, or the 5 minutes, or the 15 minutes. Right, so this website is coinmarketcap.com. This is really good, because this also can tell you the same thing as doing that, but it has it for every market. So you click 24-hour change, it will show you the most volatile ones, the ones that changed the most in the last 24 hours. So these are good coins to look at. And then volume. So these are the ones with the highest volumes, with the most amount of money in them, the most amount of trades. So the market is moving and flowing. That's what you want. Right, so what you do is you can TradingView is probably your best tool. This is an amazing website. You can do things like, maybe, yeah, I'll just show you a few things. This video might be getting a bit long. So if you want to see, you have money in Binance and you want to see all the coins are on Binance, right? This is just showing you the prices of the coins on Binance. If you type in Binance and colon, it'll show you all the coins. So if you just copy, and if you copy that, right, and then I'll show you how to make a new list, right? So if you click here, go create new list, and just go Binance. I already have Binance in, so I'm doing that. We have a new list. So if you hit Binance, then you just add that coin, and then just paste again, add the next coin, paste again, add the next coin, paste again, add the next coin. Just keep doing that until you have all the coins in. And it's an initial setup, but once you do that, you have a list, and you can do that for all the exchanges that you're going to be buying on, or else you could do it for high volume. This is like my high volume list, so the volume obviously changes a lot, so every day you're updating that and you're just adding them into your list. Or the volatile, so high volatility coins, you can add a list there. I like to do trading, so this is the coins that you're trading, just so you have them separate. And then you can have watching as well. If you have your eye on a certain coin, you're after getting some news, I'll do another video on different types of news and different types of info, like through Telegram and Twitter and Facebook and all the right, YouTube, all the right people to be looking at, right? So there's some cool things here, like on Discord, right? You can get this on your phone. I have it on my phone and the desktop. This has this group, Cosmic Trading. They have like bots that do things, right? So you can go to you get free signals. You can pay for signals, which are a lot better, but these are telling you what coin to buy, what price you should get in at. So if the price is in between that, what buy, and then your sell target. So that's right. You can just copy these signals. You don't even have to do that. But you're better off learning all this stuff, so then you'll know if it's a good time to actually go into trade. You'll see. Then you can set stop losses. I don't really use stop losses at the moment because crypto is always really it's gonna go up over. If you lose a trade and don't cash out, just leave it for a while and the coins are gonna go back up. So, but it is safe practice to just do stop losses. So you can put, like, if you put a buy order here, right? Now you'll see this is a classic example of a trade that didn't work, right? So you had your line here, right? You see that this crosses it. Right, you're here. You see that this crosses it. It is oversold, but this is not really making a move that you want to see. So it's not ticking all your boxes. So maybe you put in so once you put in a buy order here, right, which means, say this is on Kraken, you'll just go to Kraken, you'll log into your whatever exchange you're on. If it was Binance coin, you go into Binance and then you buy. You use it. You can either do market price, which means it will just buy at the price it is right now, or you can do limit, which means you want to wait. Say you want to do it a little bit lower, you can put in the buy, and then once the price drops to that, it will buy it for you. But you can put in stop limits, right? So if you bought at this point when you cross the green line, and you can put in a stop loss, you can put in an order, say just maybe here below the last low. So when that candle moved on up, you see, oh shit, it didn't go your way, but you had your stop loss. That means it will sell there, so you're only going to lose whatever that is. You're only going to lose 2% or something, right? So, and if you keep disciplined, you're definitely going to win more than you lose. Absolutely, right? So then comes different exchanges, right? So Kraken, that allows margin trading, which is they'll let you put in sell orders even if you don't have the coin. So this is XBT USD on Kraken. XBT stands for Bitcoin on Kraken, right? So say you only have US dollars in your account, you can put in a sell order. Say you're doing your thing, you're putting your line, oh shit, sorry. So this is in real time, right? You're putting your trend line. You want your trend line going like this at the bottoms of the greens. So you always put it at the bottoms of the greens and the tops of the reds. See, it's on the tops of the reds, and you put it at the bottom of the greens, right? So you know you can see here, right, in real time, you can see that the red candle has broken through the line, it's broken through the green. It's not oversold, it's not overbought, sorry, but it's still going down. It's after crossing downwards on this, so you could, it's more than likely maybe you wouldn't take that, but I probably would have taken it. It depends on how you're feeling or whatever. It's all psychological, you know. So, but then you can put in a sell order of Bitcoin, which means Kraken will lend you Bitcoin. They will lend you Bitcoin, and then boom, boom, boom. You just close it on your when it hits the line. Now what I have is for sells and buys, I do this. So that means you could sell when it hits the high, or else you could just use the green. You could just use the green, but this is what I use, right? I use stochastic RSI, MACD, and I actually change the MACD settings, because you can just change the settings until they line up and see where it's good. So I have this one down to 4. So that just kind of pops more it lines up a lot better. But I'm still, as I said, I'm always changing. So I don't use the 34. I won't be using these. So the only 3 I use are the close 8 is the green one, right? So that's the last 8 average. Then that says close, but it's actually low if you look in there. Oh shit. Low. Yeah, there we go, right? Where's that after going? No, sorry. Close, right, that's the green. And then this red is low. I don't know why it says close. See, it says low. So that's the average of the last low prices, and that's the average of the last high prices. So I use the red for an exit point. I use the red low for an exit point on a buy, and the red high for an exit point on a sell. So sorry, I'm probably fucking rambling. Well, you don't have to use these at all, right? You could take these out. You could just use the green. You just use the green. You don't even need the volume really, but once you get more advanced, you'll want to have the volume. Once you start watching videos and learning what the volume does, you want to have the volume, right? But basically, for your first setup, you want to go to indicators, add the MACD, add the stochastic RSI. So just type in STO and you'll see stock RSI. Change the MACD to the fast length to 4. Then you just add one moving average. So just type MA, moving average will come up, and just change the settings to 8 and close, and then just put it to green or whatever you like. So there's a point right there, oversold, but it's moving back up. The MACD is crossing, the blue is crossing up. You're after breaking your line, and you're after breaking the green. So there you buy in. You could close that at any time. But that's a 10% trade right there if you hang on. And you can see that it starts turning down again. You can use the MACD to see it's oversold or it's overbought. So you can tell it's going to start turning at some point. So you could even get out. But see, if you're using the green, and you're sticking by them rules, you get out at that point. But the reason why I use the highs and lows is well, it didn't on that, but sometimes, because just whatever way the market's moving, it's the same. But sometimes the higher is high, so you could get out at an earlier stage. Like if the red was up here, you could save yourself a few shillings by exiting earlier. So yeah, maybe just stick with the green. So those 3 indicators: moving average 8, close; MACD 4, 26, close 9, and they're standard settings. You just have to change the 4. And the stochastic RSI, you don't have to change anything, you just add it. So you go to indicators, and then you're doing your lines. Now if you see you can use this, resets to whatever time frame you're on. Where do we have? Here. So you'll see I have shit all over the place. I'll wipe them all off there. I should have them. Maybe it's not on the day, maybe it's on the hourly. Yeah, you'll see there, look, I'm on the Neo. That's the way I'm doing it the whole way along. So I'm just putting lines on the bottoms of the greens and the tops of the reds, bottoms of the greens, all the way along. So it's just showing you when the wave is breaking, when it breaks through. That's my strategy, right? You can close this up. So whatever coin you type into this bar will go into your watch list. But if you want to just look at a coin, you could just go BTC and it'll pop up, and then you can look at BTC on Coinbase, or you can just, once you're clicked on the screen, you can just type whatever coin you want and it will bring up the box. That's a pretty good shortcut. Right. So yeah, I don't think I finished on explaining the shorts, sorry. So when you're using a website like Kraken, right, you can use, as I said, you can put in sell orders even if you don't have the coin. So if you were to, you can do it in seconds, right? So you see, boom, the red has crossed the green and has crossed your line. Or you should move the line every candle. So you'd want to be up here. You want to be matching these lows, right? Every time a candle pops up, you just adjust, right? So in real time, you would have been here. You see the red is breaking through your line. It's breaking through the green. It's overbought, so it's going to start turning down. If you move on, you see that the MACDs are dropping down, so you're definitely selling here. So you go out to crack and you can put in a sell order. You can put in a sell order. What's going on there? Oh, here, right? Even though you don't have the coins. So then at that point, if you put in that sell order, they lend you the coins, and then boom, 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 you close out here. So then you pay them back and keep the profits, right? So you keep the profits, they'll take a percentage, but it's really good. It means that you can be making money in any market. You can be making money all day long. You can once it goes down. So basically you can do that, or you could put that there. So if you're watching these, you can be selling here, buying there, selling here, buying there, selling here, buying there, and yeah, you can just be making money all day long. And another good thing, but this is advanced, right? Once you get really used to do that, so what you should do is you should back trade. You should test this theory going back and back and back, and then once you're comfortable with that, you should start watching all the coins. Make all your lists, and then keep looking them up, like new coins that are high volume or high volatility. So Ethereum USD, Bitcoin USD, Ripple, they're really strong coins. So they're good ones to trade. And obviously these new ones that are on Binance that have high volume, these are moving loads. So these are even better to trade. You get more money, but they're more risky, right? So you want to be back trading. You want to be putting all these lines back and looking see how it worked, see if it matched up, see if you would have bought in, right? Then when you're comfortable with that, start doing it in real time. Start paper trading, as they call it. So you don't actually put any orders in, but just write it down. Or you can paper trade on this, but I don't think you can do it with cryptocurrencies. If you hit buy, oh yeah, you can. So you can actually fake trade with Bitcoin USD, Coinbase. Some of the coins won't let you do it yet, but you can actually put in your stop loss. You can actually just put in the take profit. So if you say you only want 2% profit on each trade, if you do 5 2% profits in a day, that's obviously 10%, and that's huge gains, absolutely huge gains. Even 3% is really good. It's decent, like in a day. So yeah, you do that, and then you just keep watching and doing it in real time with all the coins as you're looking. Then you just keep you forget about the paper trading, and you just be doing everything in real time. And then you keep monitoring the coins, and when you see they make the right move, that's when you buy. So yeah, that's basically it. That's trading in a nutshell. And I'm just learning, but this is definitely a good way to go. Pretty sure we can all make money off this. If not, I'm going to give you all different pages like this you can follow to just copy signals, do what you want. But you need to learn everything. You need to learn what the patterns look like. You need to learn what a wedge looks like, so what a bull flag looks like. It's all done on drawing lines on the candles. So like when you draw a line and draw a line like that, that's a descending wedge because it's going down. It's getting lower highs and higher lows, and then it could break out that way. And there's double bottoms, and there's head and shoulders. Like that's kind of like a head and shoulders there. That's the shoulders, and that's the head, another shoulder. and usually it drops off after the Head and Shoulders. So there's all these patterns I'll put up that you should learn. It's good to be able to just spot them, you know, because then if you're looking at this, you're like, oh, that's a part of a double bottom. A double bottom usually always goes up, or Head and Shoulders, or if it's inverted, it goes up. If it's a normal Head and Shoulders, it usually goes down. If it's inverted, it goes up. So if you know that and you're on the end of this, it will make things easier for you, even with these indicators. So what you can do is, well, you can go to ideas, and you can add ideas, which is people giving you ideas. This is real good. This is just like, you can copy what they're doing. You have your whole idea list of people that you're following, and then they're telling you, look, this is how they predict the market's gonna go in the next whatever amount of days or whatever amount of hours. So that's a really good, you can have all these different ideas there, and you can just be looking at them to help you see which way the market's going. So if you want to see if it's in an uptrend, say just go up in the time frame. So you see on the daily it's basically up, but it's in the last 3 days it's down. So generally if you're going in the hours, it's going to be going down. So you want to be making sell trades really, because they're going to be dropping a lot more. So it looks complicated, but it's not. You just need to dive in. Go over this video a few times. I know I'm after making it too long. Well, as I said, I'll answer any questions. I want to make this Facebook page just like a one-stop shop, so people can just get stuck in. Give me any feedback if you want me to do whatever. Fucking dancing monkey, whatever you want me to do. Right, so you can do strategy tester as well. So, alright, so which is really good. It's more complicated. So what you can do, say you're waiting for go back out to the daily. Sorry, I might be blocking that with my hand. So say so these can zoom, you can pull it in, and you can move along, and you can just reset, or you can use your mouse to move things out, the mouse wheel. So say you were here, you were at this red candle, and you're waiting to see a green cross here. You can actually put an alarm here, with just an alert, and that will ring a bell. That will just give you alert once a candle hits that point, right? So these are all the alerts I have. You can also make custom alerts, so you need to have the right things set up. So say I'll just add a moving average. And just set it to 1, right? So that's just the average of the last one candle. So that's that's actually where the candle is moving, right? So if I want to have an alert, I can add an alert, right? And I can say the 1 MA, which is the candle, crossing up. So when the candle is crossing up on that should be 8 MA, but it doesn't matter, it's all similar. So that means once the candle crosses the blue line, you're going to get an alert. So that would be like, oh, time to buy. And you can also set it moving down and then time to sell, which is really cool. When you're in the pro version, you can have it on your phone. You can have just SMS text to you, but it jumps up on the screen anyway if you're watching. What else? I'll add video. I'll break this down into videos where I learned all this stuff. So this is just showing you, and then I'll on the same trading page I'll have individual videos of things I think you should learn. Like there's the order book. You really should learn that, because this can help you in where to exit. So they call people with a lot of money whales, and right, so I'll make a lingo tab as well, as I said, and they have walls, right? So it's called a buy wall if there's loads of coins, right? Because that means if the price is dropping down, with the prices dropping from here down, once it hits that price, there's so many coins, that's 20 Bitcoins. That's going to be hard to break through that, so that's a wall. And it's similar with the sell wall. So there's a buy wall and a sell wall. So say you bought in here at 571 Satoshis, right? So that's 1 Satoshi goes up. Right, so you bought in at 571 Satoshis and you see that there's 10 Bitcoins sitting at 575. That means there's a wall there and your price is probably not going to go beyond that. Once it hits that, it might drop again. So you can put in a sell order at 574, which means you're going to close your trade before you hit the wall and you're going to make money. So this is the order book. You can see this is the past orders. There's more greens than reds there, so that means the price is going up, but there's walls. You can see all the walls here. So it's good to keep an eye on that order book once you're in the trade. Can also help you buy as well. So if you're looking at the price and you're seeing, you could just put in a price a little bit lower and wait till it drops down, and then because it hits the buy wall, it's going to shoot up. So I'll put up videos about that as well. I think that's enough for the trading. Right, what I'm going to do is, I'm pretty sure I have that strategy I'm working on is pretty fucking awesome. Like that's, as I'm doing it, it seems to be working well. What I eventually want to do is get down. You can use leverage, you can use leverage on Kraken, and you can use leverage on Bitfinex, which is going down the drain actually, but you can use it on BitMEX. You can use up to 5 leverage on Kraken, but you can use up to 100 leverage on BitMEX, right? So once we're sure that this strategy is solid and you know how to use it, I'm going to be using leverage. I wouldn't recommend using leverage because whatever you use, so say you're using 5 leverage, that means you're betting with 5 times the amount of money you have, and if you lose the trade, you owe them money. And if you're using 100 leverage, that means you're risking 100 times the money that you have in. So, but if you have a solid strategy, you're winning 100 times the money. So if you have $1,000 in, you're trading with 100 grand, and 5% of that, you're doing that every trade. Yeah, so that's the end game I want to get to. Well, I want to ideally get my money up to a point where I don't have to use leverage. I'm making big money on the trades because I have a lot of capital. So as I said, you want to be cutting out you want to be buying selling at the top and buying at the dip, right? So that cuts out the red. So instead of your price going up, down, up, your price basically went up. You skipped that, and then it went up. So it's all profit. You're not losing. You're just going up, 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 up. But this is on the day frame, right? So the lower you go, the more dips you're cutting out. You're cutting out more dips. So if you're on the 1 minute, and you see the way this is a EOS coin, it's a bit of a shit coin. So it's like, how do you trade that? But like Bitcoin would be more stable. Like you'll see it's more stable. You can use it more. But if you're cutting out the dips on the 1 minute, which is the lowest time frame, you're cutting out all the dips. Like if you're cutting them out on the higher time frame, you're not necessarily cutting out all the dips. If you know what I mean. Which is, I think, is the smartest way to go. But the percentages are so low. Like that's only 0.4%. But if you're using leverage by 100, that's 400%. No, sorry, 40%. Yeah, 10%, 10 times, 100 times. Yeah, 40% you're making on a trade, which is amazing. But there's risks, there's inherent risks with that. So yeah, and what I want to do is, once you have a strategy, right, you can use Python programming language in this Pine editor, and you can make a script. So if I have my alarm set up to to go off when it crosses this or when it matches that, and I write a script to that. I came across this bot, I think it's called AutoView. Yeah, AutoView. What AutoView does is, if you have a script that sets an alarm off at this time, it will place a buy order on whatever market you want, and it's actually a Chrome extension. Yeah, I'll go more into that anyway. But so eventually, I just want to make a script. So I want to make a script so it's just automated trading. So it's just constantly working for us. So if once I'm sure about my strategy and get it going, put enough energy into it, we can be just making money. So to invest into these small coins to make huge money. So there's a lot in the pipeline. Just get cracking with this. It's not as hard as it seems. Just like if you watch one little video a day, you're going to accumulate the knowledge. It's interesting as well. Like, there's a little bit of ego involved, you know. You feel good when you're doing it right and feel bad when you're doing it wrong. But yeah, it is a good thing. It's not a bad thing to be having an ego about, really. Yeah, so that's basically it. Gone through most. Yeah, that's. I'm just going to leave it at that. That's a long video. Sorry, but yeah. So I'm going to continue filling out the Facebook page, and hopefully we make something really good. Once I have all the information filled, we can use the post section as a community, dropping up news, helping each other out, putting ideas when you're placing a trade, blah blah blah. Yeah, so it can only grow from here, right? See you. Bye.